Hello, everybody. Good evening or good afternoon, and good morning to those from across the Atlantic. Welcome to the Angel Investing Future, or the Future of Angel Investing webinar. And welcome also to the birthday party of Dealum, which is the deal flow, angel network, and portfolio management software company based out of Estonia. Happy birthday to Dealum, to the founders, to the team. Thank you, Saren, for having us and involving us in this webinar. And I'm glad that all the attendees are there as well with us. In the next 60 minutes, we are celebrating Dealum's innovative solutions and successes by taking a look into the future of angel investing. My name is Jan Davids. I'm the head of operations at Business Angels Europe. We are the voice of angel investing in Europe and group together the largest national associations of business angels, as well as the strongest angel clubs. And as a partner of BAE, Business Angels Europe, we have seen firsthand how Dealum's growth has been both a driver and a symbol for the change of angel investing in the last 5 years. So in the next hour, we're going to talk about the state of angel investing, its challenges and opportunities, together with a fantastic panel. We'll be handling questions like, how will the network manager's role change? Which processes will be automated? How can angel group managers create more transparency in their deal flow process? How can we attract and educate the growing angel investor community? And what about collaborations with other angel networks? So we will have a 40 to 45-minute discussion with all of them. And after that, we have time for a Q&A with the audience. So I'm asking you already right now, write your questions in the Q&A section, any questions you have for this fantastic panel. And then we can vote on the questions. And at the end, we will pick 5 most voted questions at the end of the session, and then we will ask them to the panelists. So let's get it started. Dear panel, I will give you the floor to introduce yourself next to a question. So it's an introduction and question. And we will start with you, Kate. Kate Thoman, you are the Vice President of Angel Investors Ontario. And I wanted to ask you, well, how is the early stage investment ecosystem doing in Canada? What trends are you seeing yourself? And also maybe specifically regarding your great work in the Ontario region.
So I'll explain first, very quickly in a nutshell. So we are an umbrella organization for the groups here in Ontario, Canada. So we see about 65% of Canada's angel activity. So I think we're doing okay. I mean, I'm sure for everyone, right? The last 2 years are a little rocky, but we came out of it, I think, stronger. Our federal government just announced their 2022 budget, which was very focused on innovation, strengthening the innovation economy on IP, keeping IP in Canada. So we're excited to see so a lot of those programs come to life over the next year. And I mean, we've seen sort of trends, our groups moving towards more technologies like Dealum, which we're super excited to be using sort of across the network, which I think add a lot of transparency for our angel members. And I think as the groups are starting to skew slightly younger, and as we see more entrepreneurs exit and want to give back to their communities, they are also joining their local angel groups. I think they really want that transparency, and they want to, feel a little more of the process. I think in the past it was slightly, it's like, these are the 3 companies you're presented each month, but now they have greater access to sort of deals across Ontario, across Canada, and certainly have a bit more insight into what's going on in their groups. And as far as trends, I guess we're seeing a lot of, healthcare medtech deals, which has always been a pretty strong sector here in Ontario, but of course over the past 2 years, I think that has sort of reinvigorated interest in the sector for sure. So it's exciting to see those come through. And I think with each year and with the budgets, there's a really big focus on clean technologies and green tech and sustainability. And so I think, having sort of that top-down view on the Ontario ecosystem, it's really exciting to see those companies come into the angel groups and pitch and hopefully receive investment. So that's a little what's going on in Canada.
Thank you, Kate. Jeffrey from Tucson, Arizona, chairman of Desert Angels. My question to you: a new generation or new breed of angel investors is coming up, younger, mostly or sometimes exited tech entrepreneurs. What does this mean for the angel ecosystem, in your opinion, and angel group management in particular?
One of the particular things Kate just cited, and that's the fact that we're seeing younger members join our group, because they are indeed very tech aware and came out of exits that saw them at a much younger age than historically angels have come from. And over the last 2.5 years, this new breed of angel is empirically more than 50% less senior than their predecessors. Our previous average age, if you will, was 62 plus. Average age of the new members over the last 2.5 years is in the range of 40 to 45 years. So it's a significant difference. What does this represent? It represents energy, in addition to the fact that they're much more current in their technical awareness. And that has both opportunity and challenge to us as an angel organization. They obviously can provide value to the funnel management process, particularly where they can bring their subject matter expertise that is much more current to bear on the screening and diligence processes. The challenge sometimes is it takes members of this younger group some time to appreciate the fact that they are no longer the king of the hill as they were within the walls of their successful businesses. Rather, they need to learn that they're among peers who got there first and who in many cases have seen that and done that as many times and with equal or greater success than the younger tech-aware angels that come to us. They absolutely, given several months and sometimes close to a year, can begin to understand that they have a role to play in the organization. And when they bring their capabilities to bear, it is meaningful to the organization. Desert Angels is a very tech-aware organization. More than 50% of our investments or opportunities that we engage with are related to life sciences or to higher technology. And as a result, they represent a good addition to our management team and member team in relation to the opportunities that we address.
Thank you, Jeffrey. Jacopo, you are the director of the Secretariat at the European Business Angel Network, and you are very historically well connected with the rest of the world. I was wondering if you could tell us a bit about the trends you see personally from your experience, but also on a worldwide basis in angel investing.
Yeah, absolutely. So Jacopo also representing the European Business Angels Network, the trade body that represents this industry in Europe since 1999, 150 member strong association with the bulk of the community being clubs of business angel networks. But to get to the question, yes, absolutely. Lots of what Kate and Jeffrey have said also applies to other parts of the world. We're definitely seeing across many continents the newer generations approaching angel investment, and those new angels are typically exited entrepreneurs, people that have sold tech businesses typically, and that are now reinvesting in the ecosystem, in the entrepreneurial ecosystem around them. What was interesting is a couple of weeks ago, we were at the Global Business Angel Network Summit, which was held in Riyadh, Saudi Arabia, during the Global Entrepreneurship Congress. And together with our colleagues from the United States, Latin America, Asia, and Africa, we were commenting exactly on this topic. So very good that we have some fresh content from that meeting to share also here with you guys today. I think a global trend across all continents has been that 2021, definitely compared to 2020 and even to pre-pandemic years, is a record year when it comes to just amount of funding and amount of investment put in, not just by the VC industry, but in general by all private investors investing in startups. This is obviously much more noticeable in certain continents, such as Africa, for example, or Latin America, where pre-pandemic investment activity was considerably lower. Nevertheless, just to give some very quick stats, in a country such as India, in the past year alone, there were about 40 or so unicorns coming out of that country. I think that alone can kind of give a sense, a feel of how quickly entrepreneurship is on the rise in many parts of the, let's call it, developing world. This, anyways, staying in India, is a big number when you compare it to the fact that the VC industry there is relatively new, mostly made up by foreign investors that are pouring their capital into these markets where there is a lot of growth and there are a lot of interesting companies that can deliver growth. This is also very much the same on the African continent, where we've noticed a huge increase in entrepreneurial activity coupled with foreign VC investment pouring into the country. What is also encouraging, though, is that the local scene investment community is also continuing to grow. Nevertheless, I think still scratching the surface when it comes to the, let's say, number and quantity of private investors investing. So just to give a quick feel for that, a country like India, which has more than 1 billion citizens, only has about 6,000 to 7,000 angel investors, and I think we can easily capture how this is just really a little portion of the people that can really start investing in that country or just today active. Who knows what the future reserves. Now, when it comes to Europe and North America, of course, we're also seeing 2021 being a very strong year for startups and for investors. I think unprecedented when compared to not just the year before, but to all years before the pandemic. I think what we can say, though, about more, let's say, established and mature markets, such as the European and the North American one, is that there is already a lot of competition on seed stage deals, and we can only expect this to continue growing. Competition meaning that angel investors are starting to compete in the seed stage with also the venture capital industry, not to mention other kinds of investors that have already been quite established in this space. I'm talking, of course, about crowdfunding platforms, but there's also other investors like family offices, which have a history of also going relatively early in the startup's life cycle with their investment. This way, anyways, will start to generate a lot of competition increasingly in the years, and so we shall see maybe in the discussions that follow how angels can adapt and maintain a relevant position and an edge, so to say, vis-a-vis the other seed investors on the market nowadays.
Thank you, Jacopo. Absolutely, those data points are very important and will be part of our discussion indeed. Now to Reginald Vossen, you're the director of Ban Flanders and been here in the industry since 1999. You've been here very long and you have probably lots of insights how this game has changed over that period. How do you feel about these latest new trends and what does this bring along for you as an angel network manager?
Mm-hmm. Okay, just as a short introduction, Ban Flanders is indeed quite long in the arena. We have about 220 members for the moment. We have about 450 deals done yet, some 65 to 70 million invested. Besides that operational task, I'm also in the board of BAE, Business Angels Europe, which is the association of the National Business Angels Network Associations. Quite complicated Europe, as you might know. And within BAE, we have the BAE Club, which is the club of the 19 most performing business angel networks throughout Europe, which kind of needs to serve as a basis to try to get business angels into pan-European investing based on the confidence built between the different networks. That's the rationale behind this club. But coming back to your questions about the evolutions, well, as a matter of fact, we have seen the number of angels joining networks has been growing quite high last 2 years. I think the lockdowns have put a lot of people at the way to search for investment. We see that a lot of people like to invest as directly as possible. Crowdfunding was already there to show that last 4 or 5 years, but now on the level of angel investing, meaning bigger tickets, we also see this trend coming along. So a lot of angel networks have been flourishing on number of angels adhering to the network. But also a lot of business angels, or so-called business angels, not organized, not within the networks, have been on the rise. So I guess this search for direct impact, direct return also has moved a lot of people into investing with bigger tickets into the field. And I guess that's the biggest challenge for the entrepreneurs right now, to find within this complete bush of investors, angels and other alikes, to find the real business angels, because I think there's a growing role for business angels networks in this market, because the networks can provide the necessary structure, perhaps even social control, which is sometimes needed, education, personal guidance to entrepreneurs, and also to business angels. I guess a lot of business angel networks these days deliver deal guiding services, helping angels and entrepreneurs after the first match has been made in order to go from match to deal. And I guess that's a big advantage business angel networks will have into the future. So I guess what we see now is quite a shock, having a lot of people coming into the market. I think we as networks need to grab this moment and propose ourselves as being the right place for these individual business angels to learn more about business angel investing and start doing this professionally, in order for us not to ruin the name, the good image business angels have in Europe, but also for entrepreneurs to know where to address. They need clear points of address, because nobody has written business angel on his forehead. So you need to go somewhere, and I think networks can play important role in having quite good access to good business angels. Because I concur with Jeffrey, these king of the hills, as they were in their previous companies, need now to play in a different role. Most often they will become a minority stakeholder, having to learn to absorb a lot and giving also a lot in order to get to a final point. You're not longer at the steering wheel, but you're the guide. So that's a new role, and a lot of business angels, and certainly the new angels, young angels, which are still active in their professional field, perhaps have not this reflex to go a little bit back and say, okay, I'm now 10% shareholder, 15% shareholder with a specific role within the board or an advisory committee. So I guess the role of a network is getting more and more important, elaborating all kinds of possibilities to bring these new kind of members in, syndication possibilities, co-investment funds, whatsoever. So we have to deploy all our possibilities in order, first of all, to be sustainable and be relevant in the future, but most importantly, to play a new next role.
Thank you, Reginald. Let's go to the challenges. We have macro developments, geopolitical developments, economical issues going on around in the world, as well as other things such as digitization and some of the other things you alluded to already. So maybe going back to you, starting with you again, Reginald, can you highlight one challenge very shortly in 2 minutes, what for you is the biggest challenge in the angel investing world right now, which you are addressing in your network?
Well, I guess this very clear definition and promoting of the role a real business angel fulfills. And we have seen now for over 20 years that we've been building the image throughout Europe for business angels, and the work which has been done across the pond as well, is now challenged by newcomers in the market who claim to be the new business angels and so forth and so forth. It's always easy to use a good name to promote yourself with something else. So we need to very much crystallize what we can offer, all our actions, our activities, how we have deployed all our opportunities in order to help and to sustain real business angels in their activities. For me, an angel still comes with two wings. It's not only about money; it's also about the know-how which he brings, and with the sole return coming from a capital gain. A lot of newcomers have somewhere a different stance in this. Or they are, or a company which is more like an investment boutique, or they try to help entrepreneurs to find money, or they are consultants, or they are. I think we need to very clearly focus what is a business angel, and that's the role for our business angels and our umbrella organizations to do so. And this makes us outstanding towards all the other actors. So we need to have a very clear communication about what we do. We don't need to go into collision or into competition with these new players. We need to bring the best of both worlds. We managed to do so with crowdfunding platforms, which also in the first phase, at least in Belgium, came as we are the new capital providers. So angels, they are out of the market, and it's now up to crowdfunding. Well, we have seen very interesting move in two parts in Belgium. One part really went into confrontation with the crowdfunding, and it only resulted in a trickling down the angel investment to lower levels, tickets of 10, 15,000 euro. While we, in our Flanders region, we said, okay, crowdfunders are there to stay. We can bring the best of both worlds together. We have a professional, semi-professional investor, meaning a business angel. We have the market validation through a crowdfunding platform. Let's invest together, which makes that we combine the best of both worlds, which is much more better. And I think we need to do so with all these new players who come along as well.
Jeffrey, to that point, how would you highlight the advantages of angel investors versus the competition which is coming up right now? Please do unmute. Oh, you're muted. Yeah.
Keeps you from hearing me type on my keyboard. I think we need to start at the bottom of the pyramid with friends and family, where investment is most often occurring at the very early stage of any business entity. Of course, this is simply due to the fact that friends and family know the founders intimately. And in relation to their particular group of friends and family, that's where the money starts from. Other than with an exceptional wealthy family, this group can be persuaded to kickstart the business. But beyond that, their pool of funds is most frequently unable to be persuaded to fund the next capital call. And this is where angels most often enter the picture. However, in the startup and early stage investment space, this separation between where angels play and where VCs enter the game is becoming much more cloudy. And I think Reginald just cited some of that. I think that we all know the root cause of this situation. We have too much capital chasing too few truly qualified opportunities. But this is a more detailed topic for perhaps later discussion. Let's get back to the original question and look at the advantages of angel investors in comparison to venture capital firms. From my perspective, an angel investor represents an advantage to a competent founder based on the fact that the angel investor or the group or syndicate that they're part of represents both sufficient capital at a point in the life of the business where startup capital is needed at the level that the angel group or the syndicate of angels can afford to make the investment. And, sometimes this capital can also come from micro VCs or venture capital groups. But the biggest difference between the two is what Reginald just cited, the fact that the angel investor not only brings the ability to write the check, to engage in the deal, but they also bring subject matter expertise, which is provided together with making that capital contribution, and typically at no additional cost to the enterprise. And that's critical at the early stage of any startup business, because every dollar of overhead that they don't have to spend on sound advice can go directly into making their MVP or their go-to-market strategy come to fruition. The VC can certainly provide the capital, but more often than not, it's at a much higher cost in terms of equity ownership. In many cases, the VC is only going to affect more closely managed business efforts, which in many cases the founders can find distracting or interfering with the direction that they perhaps want to go. And that's something that they need to learn how to deal with. Angels play a role, and very often, and Reginald again cited this, it's an integration of the steps from friends and family to perhaps now crowdfunding, which Desert Angels also engages with, and typically as the lead investor in an equity crowdfunding effort in the United States. And from there, being able to segue into the micro VC or VC marketplace. Credibility is gained at each stage by the entity, and the cooperation and integration of those multiple sources of funding becomes critical to the long-term success of that startup as it moves to middle stage.
Thank you, Jeffrey. Jacopo, I ask you once again to provide the big picture here. So the challenges of world events on angel investing, the pandemic, the war in Ukraine, what do you have to say about these challenges in particular?
I mean, first of all, they're heartbreaking in many cases. Regarding their impact, obviously it's a big shock for investors in the short term. I think that's more or less the case with every crisis or every difficult situation. Keep in mind that typically angel investors are only investing a part of their assets in the startup asset class, not all of their assets in it. So that means actually that a lot of their wealth is probably going, in a negative direction during those complicated moments, which in the short term for some investors means pulling the handbrake, so to say, on investment activity until things recover. But maybe to quote a friend who's a serial entrepreneur, he, who rightly says, pandemics, crises, you name it. These are the alarm clocks of entrepreneurs. These are the moments where innovation really happens. These are the typical phases where some of the new companies, the companies of tomorrow, are born, which ultimately means that within, let's say, 6 months, a year, usually you start to see a lot of fundraising from very interesting new companies that are servicing the new world with a new, approach. So typically, I think you always see a dip in the market, followed by a pretty strong recovery in the months that follow. This is definitely the case in 2021. I think everyone has seen numbers published by multiple sources, always pointing to this same direction. If you go back in time and look at really old numbers from like 2007, 8, 9, you can also see more or less the same exact trend, a pretty big dip once the big financial crisis started, followed by a very strong growth in the VC and in the angel market in 2009 and following years. So if that answers kind of the point, lots of opportunities occur in these difficult moments that entrepreneurs immediately grasp, and shortly later, angel investors are typically the first ones to fund.
Thank you. Kate, zooming back into the workings of the angel group, how would you say among all these challenges, how would you say an angel group can remain competitive in getting the best deals and the best deal flow?
I think that's really interesting. And here in Canada, we have a lot of support for early stage technology companies where there are lots of programs that are supported federally or by the provincial governments. And I see an interesting comment about women in the chat. And I think, that points to really remaining competitive and finding the best deals is going to sort of those, I guess, more fringe groups is, looking at more women entrepreneurs or, women-led teams, looking at more diverse founders because, there's lots of research and data to show us that those teams perform better. They outperform, sort of their male counterparts or, their mostly white, male teams. So looking at those teams and, really I think too that comes with confronting your own biases. Biases. Anyways, confronting those your own bias, those unconscious biases, which I think is, our angel groups are beginning to sort of learn, and they're seeing that there are lots of interesting good deals within, women founders or, Black founders or immigrant founders or whatnot here in Canada and Ontario. But actually, having those companies present at an investment meeting is very different than actually, writing a check, a few weeks, months down the line after that investment meeting. So confronting those biases and challenges that are faced by more diverse founders, I think brings really interesting deal flow to your companies. And again, I think as, the groups skew younger, they want to see more diverse founders. They don't want to see, I always joke, it's like boy bands with a robot. They don't want to see that anymore. They want to see they want to see more interesting companies. And I think too, for me, when I sort of look at the whole picture, what's going on here in Ontario, I see a lot of interesting companies that, have a triple bottom line. And most of these are led by women or, people of color, diverse founders, which is really interesting and fun to see this sort of trend of doing social good while still making money in a return sort of take off a little bit. I think there is still some, I think some people still hear it and they think, oh, it's a charity or something. But I feel like over the past especially over COVID, the past 2 years, we've sort of seen that triple bottom line, those companies that are doing good while still making a good return for their investors really sort of take off. So I'm excited to see, those take off. And I think that too, finding companies that have a larger global picture or a sort of a better worldview in mind for the future. Those create really interesting, impactful returns where, I think angels can play a really interesting role.
So that brings us to the third part of this webinar, and where are we heading? And Kate, I want to go back to you already because you alluded to it, the future and where we should be going as well, in your opinion. So the question is, which processes indeed should we speed up? And maybe you can be very practical in what things are you implementing in your own region, in your own angel networks, to speed up the drive towards more diversity?
Yeah, I think, so some of the processes, I guess, and being very sort of practical, the processes that are very slow for us is due diligence. And so we're working on some programs to hopefully work with service providers here in Ontario to sort of speed that up for the groups. I mean, right, this is, and I always have to remind founders of this, these aren't really full-time, this isn't someone's full-time job. This is, something they do on the side, or perhaps they're semi-retired or whatnot. So things do take a long time sometimes. So we have to remind founders of that. So working on speeding up that due diligence process and working with service providers to help the groups speed up that process. And I think DLM 2, like I mentioned earlier, adds a really wonderful, sort of layer of transparency for everyone, for all the group members. They can sort of see, maybe what deals didn't move on to an investment meeting that were presented to a larger group, or, say I'm an investor and I'm really interested in clean tech. I can go into DLM and see sort of all the clean tech deals that are happening in Canada. And maybe that's not, the focus of the broader group, or they just didn't make it to that investment meeting. So that I think is really interesting for the individual angel investor. And then, sorry, what was the second part of that question?
No, I mean, that ties into, my question was like, what are the trends and what should we pursue, and also very practically. But looking at our time, let's go to the next one. No worries. Jacopo, could you speak to a little bit on the future, and who are the winners and losers of the trends we just discussed in this angel investing space?
Absolutely. So, I mean, we did already say a lot of things about how increasingly competitive the seed stage market is becoming. And actually nowadays, speed of deal execution is becoming an increasingly important thing, meaning that if you as a founder can get that funding very quickly from the next investor, believe me, you will probably go to that next investor, as opposed to the relatively slower kind of, more complex kind of process-oriented investor. So speed of execution is obviously something where also angels and angel networks can do a lot. And here, of course, the shout out and the endorsement has to go to Dealloom, that makes this whole syndication process between individuals in an association a lot more efficient. And I think since years, the real kind of problem that the Dealloom solution is solving is exactly that, making the whole syndication amongst the angels more efficient, hence quicker. So I think that if angels and angel networks start adopting a lot more of a efficiency in their processes, this can ultimately reduce the funding time and make the entrepreneurs, receive the money they need in a relatively quick time frame. So that I think is a big area where a lot can still be improved and a lot can be done. And obviously, another important thing that was in your question, who will win, who will lose from this new kind of world we are living in? Probably the same answer that can be applied to any other context. It's the adaptability, your capacity to maintain a relevant role in today's world. And those that are obsolete get crushed by the passing of time. So maintaining, let's say, modern approaches to finding deals, to sharing deals, to making the investment close in a very efficient and quick way is probably going to become one of the big factors that set apart, let's say, those that survive from those that do not. And then I think another comment I wanted to make is that angel networks need to be very careful at exactly what was said earlier, at how they position themselves vis-a-vis the other actors in the market. I think for the startup entrepreneurs, they must perceive that when you receive an investment from an angel or an angel group, you're getting a lot more than just the funding. And that extra added value you are getting as an entrepreneur, believe it or not, in your first years is going to be much, much more important and crucial to the success of your business than the pure money that will be pouring into your bank account. So that is one aspect that definitely the entrepreneurs need to appreciate. But flipping things around also, private high net worth individuals that want to approach investing in startups need to perceive investing through a network as a much more successful way of making investments, because you're pulling capital together, investing in curated startups that somebody else has done the hard work to filter and to present to you. And as a private individual, you need to immediately appreciate that if you're part of an angel club, you're going to get a lot more out of it in your portfolio in terms of good returns in time. So I think the angel networks that do want to survive, long story short, to summarize, need to address, on one hand, their own processes to maintain a competitive edge in a very, very competitive world where speed of the deal closing is also now a big factor. And on the other side, they need to really present themselves and that added value they can give both to the entrepreneurs raising capital, but also to the private investors ready to commit that capital.
Thank you, Jacopo. Jeffrey, of all those processes and trends you see right now, and also in the workings of angel networks, maybe your angel networks, which ones should we try to turn around and stop doing?
I think I touched on this in answer to an earlier question, and that's the fact that we're confronted over since the pandemic, really, with the fact that there is an abundance of capital in the market that is chasing too few well-qualified deals. This trend manifests itself in out of this world valuation, pre-money valuations being associated with startup deals. And as a result, this has the potential for three issues associated with it. This can cause a deal to never get off the ground, as no angel network will take a bite of that apple where the cost is too high given the development stage of the offering business. This can cause a deal to either fail or not be able to affect the next round, as they will not be able to justify an ever higher next round valuation, or worse than this, they may actually need to make an offering in a down round where the valuation has gone down, disappointing their original investors who were tempted sufficiently to take a bite of that overvalued apple. And they can also fail to produce a meaningful return on investment where the entry cost was priced subject to an excessive valuation. How do we turn this around? For many angels, the answer is often a self-fulfilling prophecy, where any and all of those opportunities for realized failures cause sensible valuations to be restored. And it may not happen to the business that started into the angel round and beyond with too high a valuation, but it certainly will adjust expectations going forward. In the immediate case, we're working to turn this around by being much more assertive in saying no. Your pre-money valuation is too high. And this tends to allow us to gain traction for investment interest. Plus, here is what you need to achieve, and this is advice to the entrepreneur. In order to achieve this valuation that you're claiming today, you need to start at a more realistic valuation and let us help you not only with funding at this stage, but as all of us, I think, have emphasized today, the fact that angels bring the value of their mentorship and experience to the party, which will allow the company to grow to the point where it can justify a higher valuation.
All right. That ties into the question I'm asking you, Reginald, before we go to the Q&A.
Mm-hmm.
How will these founders' expectations, you reckon, change over the next 5 years? Also coming from the question of valuations, and how can your angel group or angel groups in general react?
Mm. Well, 5 years is a long period, but we surely see that the entrepreneurs, they have much more choice now. So we're in a competitive game. I guess they also want this speed, as Jacopo said, that the speed of execution is very important. This is so we need to have networks with reliable procedures, but being able to adapt and be agile in changing towards the needs of the company. And in this abundance of choice we have, at least in Europe, we see that a lot of the newcomers are small ticket investors who care less about return, I must say, because mostly those are already incentivized by some tax break regulation or whatsoever. So the big so-called return is already done by investing. So I see a lot of crowdfunders, but also other investors care a little bit less about the return. So there is pressure on the valuation side for sure. We will see that we get more and more into competition with players who are agreeing on a less high valuation. We lose a lot of deals as we see this happening towards these smaller ticket investors. And we say perhaps they are investing in the wrong case, but perhaps in fine they will show that they were right. So valuation, surely. I think there will also be a shift in, how should I call it, the willingness from the entrepreneurs to allow business angels to interfere, to interact, to get involved in the management, or at least in the board of companies and so forth. These smaller ticket investors don't claim that role. We angels do claim that role. So we have to take care not to be seen as the greedy guys who really want to grab positions in the companies, where some of the entrepreneurs, at least at the point when they are raising money, and first of all, they are raising money. When they are raising money, they don't see this need perhaps, or they don't perceive this advantage of having a business angel with the good contacts, with the good experience and so forth coming into the companies. If you ask me, how can we as networks work towards that? Well, I guess certainly on the speed of processes, there's quite some work to be done. We have platforms like Dealon which can help us in order to bring the incoming deal flow as soon as possible to the investors and in a structured way. I think in the processes of guiding presented deals towards a deal, presented companies towards a deal, speeding up that process of deal guiding. For instance, in Ban Vlaanderen, we have a lot of template documents, term sheets, shareholders agreements, and so forth, which we put on table, being the standard in the market, and being speeding up the process, because at least when you put documents on the table, you can agree or not agree, or at least make an inventarization on what you do not agree on, which makes it much more easier to come quickly to a deal. So I guess these are ways of bringing that speed into the process. And finally, for having the good angels in your network, I think it's very important to start firing up these cross-border investments within networks. If we really want the good angels in our networks, we need to give them access to the best deals in their sector. So the time where angels only invest locally, when there were sector agnostic and so forth, these are days gone by. As a matter of fact, a lot of angels are now investing vertically, and they want to invest in the best of breed of projects which are there in their vertical. So we need to give them access to that. And I guess also DLM, but also the BAE e-pitches and so forth, are delivering on that point, bringing entrepreneurs towards a group of angels who is interested in their sector, who has relevant expertise in their sector, and getting cross-border investments done. So perhaps one last point where we also can differ from other investors which are coming into competition is being able to deliver the follow-on rounds as well. So I think networks have a very good position. And for instance, we did it ourselves last December. We established our third co-investment fund, 20 million euro, which is in Europe one of the biggest co-investment funds funded by business angels, which is able to deliver up to 3 million, 15% of the capital, up to 3 million euro of capital in companies in which business angels have invested. So that's bridging, really being flexible, being at the side of your entrepreneurs when they grow. And I guess some of the other actors don't have this power and this flexibility, so we'd better use this.
Thank you, Reginald. Thank you to all the panelists for your feedbacks. We discussed the challenges and the crises and the competitiveness right now in the angel market. But all of you have given very candid and realistic, but also positive feedback on how angel networks can be future-proof and why angel investing and angel investor networks are still the premier, the leading equity provider in the early stage market. So thank you all for that feedback. Let's go to the questions with 10 minutes left. Saren, I'm giving you a quick peek. Any outcomes on the question?
I think we can just go in the order as they are.
Okay, let's Wood raises his hand. Very quick answer, very short question, short answer. What is the best way to get in touch with an angel investor network? Reginald, one sentence.
Search them on the internet and call them or mail them. If we as networks don't do our promotion as it should be, we're not worth having you as an angel in or having you as an entrepreneur in.
Thank you. Next question. We only have about 6 weeks runway left. Is there any way to accelerate the dialogue process with presumably angel investors? Maybe Jeffrey?
This was Benjamin's question?
Correct.
Well, Jacopo made this point earlier, and it's something that the angel groups have had to adapt themselves to, particularly over the last 12 to 18 months, and that's the speed of process. With only 6 weeks of runway left, our typical turnaround time from an initial application through due diligence is between 10 and 12 days. So I would tell them to apply. Seek out using the internet, find the angel organization that's in your area of business, and make your application. The deal flow process, as supported for each of us within the DLM platform, allows us to make that rapid turnaround. And if your deal has merit, 6 weeks of runway can be cured within 2 weeks.
That's encouraging, Jeffrey. Thank you. Next question from Cindy. How do we keep the bias out of the tools we use and out of the processes we are using to evaluate opportunities? Any reactions there? Maybe Kate or...
Sure. I mean, it's hard to do. We all have those natural biases that affect, how we make decisions. I think DLM is interesting with the voting function. I mean, a lot of our groups take advantage of that, especially in the screening process. And that helps sort of guide what companies will make it through to the investment meeting, typically at the end of the month. But again, I think it's probably more on the education side, having partners come in or really confronting those biases on sort of an individual basis, unfortunately. I mean, with DLM, you have you see the photo of the founder and the team and everything. I mean, I'm not sure there's a function with DLM where you can sort of take that out at like the very initial screening process, maybe with no name or photo, so you don't have those initial reactions. But unfortunately, I think it's something you have to do at the individual basis. And I hope that our angel groups are, working, towards confronting.
Next question from Cindy, maybe for you, Jacopo. Do you think there should be more standards in pre-seed valuations?
Standards meaning like a consolidated process, one and only consolidated process to come up with a valuation? Definitely not, if that is the scope of the question. Honestly, in pre-seed, the companies typically never have any historical data to show you, relevant historical data to show you, so on sales, on things like that. So there are only relatively few methods that you can use to get somewhat of an understanding of what the valuation of that company should be. Looking at a lot of deals around you is probably the best kind of way to make an approximation if what that company is raising in today's world is more or less, realistic, normal. So I would say if there is to choose one, it's probably more on the comparable company side, but overall, like anything, it's always a question of what you're ready to pay and what that other party is ready to sell at.
Thank you.
I perhaps would make a pledge for having at least an attempt to shift the valuation issue further down the road at the exit moment, or eventually by some kind of mechanisms you could put into the deal that you get more shares back if you reach certain milestones and so forth. Don't try to do the reverse, taking shares from somebody who doesn't meet the milestone, because it's really not promoting his enthusiasm as an entrepreneur. But there are ways to postpone the problem a little bit more in towards a secure surrounding where things get more clear.
All right. I saw at the start of this webinar one question in the chat, and maybe we can end with that question for each and every one of you. It's a difficult question because it goes to the core of what we try to do here. But Jason is asking, what is the definition of a business angel network? And that maybe ties into what we were discussing today. Any reactions there? Maybe Reginald, what is your definition?
Business Angel Network is an organization that, first of all, brings together engaged investors who are willing to invest wise money, meaning money plus their know-how, contacts, and so forth, on a basis of membership. For me, it's very important to have angels being member before they are confronted with companies. So you are very sure that you have a clear cut on who is your angel. There's a certain code of conduct he has to subscribe before he can even see one project, and that's important. Secondly, which is a platform which brings together both parties, prepares them, guides them, helps them up until conclusion of the deal without winning any money itself by the deal. That's important, I think, for the network as well. We don't become shareholder in the company. We will not be how should I say, paid for the success of the company or the deal finally. In our perspective, we are just a neutral matchmaker trying to do the best from both sides to prepare them and to bring them together in order to create a great deal.
Any additions or any last thoughts also on that particular question? Jeffrey, Kate, Jacopo? Has to be short.
I think, just again, coming back from the GBAN meeting, you can kind of tell that around the world, the definition of a business angel network can vary. I think Reginald's was pretty comprehensive and valid, but I would say in some cases you start to see angel networks ultimately becoming an early stage seed fund, with angels, quote, being the LPs of that seed fund, and with an investment team which has usually experienced angels being the decision makers of that fund. So I guess that's kind of the variation on the theme, depending on different markets with different also rules and jurisdictions and so on. But I guess that is an additional kind of service that now is increasingly common in many business angel networks.
Thank you. Jeffrey?
I'm nodding because I agree with both Jacopo and Reginald on these topics, that the business angel network brings together not necessarily like-minded individuals, but like-minded in terms of their investment philosophy. And they represent a group that shares a common background within the membership group that they have become a member, which mostly that's guiding the deal flow process itself, something that DLM allows us to have very well defined. And it actually turns the funnel process into an educational event for the entrepreneur, in addition to providing the mechanism necessary to better ensure that the deals that we review, put through diligence, are wisely invested in.
Thank you, Jeffrey. Any thoughts, Kate, or should we leave it at that?
We should leave it at that. I agree wholeheartedly with everyone.
Fantastic. Thank you so much, Jeffrey, Kate, Reginald, Jacopo. Thank you, Saren. Thank you, Dylan. Happy birthday once more. This was great. I think there will be a recording, and please do get in touch with all of us with any more questions and or remarks. Wishing you a great evening.